Kitco News special coverage of the PDAC convention is brought to you by Gold Mining and Uranium Energy Corp.
How important is uranium to the security of the nation? Well, we're here to discuss this topic with Scott Melbye. He is the Executive VP of Uranium Energy Corp and the CEO of Uranium Royalty Corp. Scott, welcome back to the show. It's a pleasure to have you here.
David, it's great to be on the show. Yeah, it's a very timely topic. I think we all are aware of the events in Ukraine and with the Russian invasion and the reliance that Europe has on energy supplies. But we have our own reliance in the United States as well, with close to 58% of our uranium supplies coming from Russia, Kazakhstan, and Uzbekistan for 20% of our electricity in the US. That's an over-reliance that obviously is putting too many eggs in a very risky basket.
Yes, so let me just recap what you just said. Very important. A lot of people don't know this. We know uranium is being one of the fuels used for nuclear weapons, but not a lot of people might realize that a big portion of our electricity generation here in the US comes directly from uranium. Like you cited, 20% of total electricity comes from nuclear power. Of that 20%, I was reading from the New York Times, for example, 16% comes from Russia, but you're saying that number actually is higher. It's more than 16% of our uranium coming from Russia.
Yeah, 16% of it's coming from Russia through enriched uranium, and then the remainder is coming from Uzbekistan and Kazakhstan, which is very much in the Russian sphere of influence. And we're seeing vulnerabilities of exports of uranium coming out of those countries as a result of potential sanctions and practical constraints given the Russian invasion.
But from what I understand, Scott, and please correct me if I'm wrong, currently there is no plan by the Russian government to impose retaliatory sanctions and stop exports of uranium. And even if they did, current nuclear power plants in the U.S. have plenty of inventory on hand to weather a potential sanction and could potentially run a couple of years even without any external feed or supply. Is that true?
Sort of. We have had rumblings out of the Russian Duma with the more extreme members of the Russian parliament. And, you know, it is a vulnerability that Putin could see our reliance on Russian uranium as a way to embargo us. But there are two bills circulating in the U.S. House and Senate right now that would ban Russian imports, similarly to what we've done with oil, gas, and coal coming from Russia. So we have to really kind of come to grips that we're probably moving into a post-Russia world in terms of nuclear fuel. Utilities, from a reputational perspective, are already moving away. Vattenfall in Sweden, a large nuclear utility in Europe, terminated their supply contracts with Russia on day one of the invasion. So whether it's voluntary, it comes from Russia, or we impose those restrictions, the potential of Russian supplies being cut off is very real. Now, the two bills in the United States, some have an immediate ban on Russian uranium, and one is more phased in over 3 to 4 years. And so that's reflecting kind of the scope of potential sanctions in the U.S.
We're going to come back to these bills because from what I understand, they haven't really been passed yet, right?
No, they've been introduced in the House and Senate on one of the bills, one championed by John Barrasso out of Wyoming, and then another bill by Joe Manchin out of West Virginia. So I think the potential of those parties coming together in some sort of compromise solution is highly likely.
So let's say today, let's say tomorrow, Russia decides to stop exporting uranium to any of the American allies, including the U.S. What will happen to the energy market here in the U.S.? What will happen to our electricity production capabilities?
Yeah, so it's not equal with each utility, but there are some utilities that are overly reliant on Russian imports and have deliveries coming of Russian enriched uranium in the coming months. And I think globally, as an industry, we can ramp up. We scaled back uranium conversion and enrichment globally to make room for Russian supplies after the fall of the Soviet Union. We can ramp it back up, but it does require signals from the market and a commitment that utilities are truly moving away from Russian supplies. So I think there'll be price impacts to those utilities that made a risk management decision to go heavily into Russian supplies. There will be a cost to fix that risk management failure, if you will. But I'm hopeful that we have a robust global fuel cycle in Western Europe, Australia, Canada, and the United States that can ramp up to meet that.
Let's talk about these bills and some recent news out of the Biden administration. I'm just going to read this headline in a few paragraphs from this article from Money.com. It's all over the news. A lot of people have covered it. U.S. seeks $4.3 billion for uranium to wean off Russian supply. The Biden administration is pushing lawmakers to support a $4.3 billion plan to buy enriched uranium directly from domestic producers to wean off the Russian imports of the nuclear reactor fuel, according to a person familiar with the matter. The Energy Department officials have met with key congressional staff where they said such funding is urgently needed, said the person. Yeah. Okay, so what's going on here, Scott?
So that is, I would call it the Strategic Uranium Reserve 2.0. On interviews with Kitco and in recent months and frankly years, going back a couple of years now, we've been working to put in place a Strategic Uranium Reserve, which came out of the recommendation that came out of the Trump administration, but funded on a bipartisan basis by the Congress to buy domestic uranium, ideally $150 million a year, but it's been funded for this year at $75 million. Because of the events in Ukraine with Russia, this strategic reserve is being expanded to $4 billion is the budget request, I believe, that DOE is asking for. That would include not only uranium conversion, but also enrichment. So it's a bigger reserve, more comprehensive, and so we see it as very positive news. We'll see this is an aspirational budget request, so we'll see how practical that is getting through the FY 2023 budget process in the coming weeks.
What will the strategic reserve be used for? From my understanding, enriched uranium is weapons-grade uranium, is it not?
No, we need enriched uranium for nuclear power generation. So low enriched uranium powers our nuclear fleet. Okay. We also have a next generation of small modular and advanced reactors that require HALEU fuel, high assay low enriched uranium. That type of enriched uranium is only produced by Russia presently. So with new reactors coming into Idaho, Wyoming, Washington State, lawmakers from both sides of the aisle are saying this is unacceptable, that our next wave of advanced reactors in the United States are going to be fueled by Russia. That was unacceptable probably before the invasion and is definitely now. So we have a lot of inertia and support from, like I said, bipartisan support to see that the uranium reserve cover not only natural uranium, but the enriched uranium that goes into the existing fleet and our future advanced and SMR fleet.
I find it interesting that you mentioned Sweden cut off that supply voluntarily. Why didn't the U.S. voluntarily cut off uranium supply?
Some have. Some utilities in the United States have made a decision even before the invasion that they didn't feel comfortable buying uranium and nuclear fuel supplies from Russia. Others saw Russia as a diversification of their global fuel requirements, and it's understandable. We thought Russia was coming out of the Soviet Union, joining the global community and be a reliable supplier. But with the events of the last 110 days, I think views are really changing that we really can't. Whether we never trade with Russia again remains to be seen, but I think in the near term, the faster we pull that Band-Aid off and we stop Russian imports, the more quickly uranium conversion enrichment suppliers in the West can ramp up to replace that lost supply.
From my understanding, I mean, yes, Russia, Kazakhstan, they are that bloc is a major exporter of uranium, but that's not the only place in the world where uranium comes from. Outside of the U.S., the U.S. does have many strategic partners and allies that mine uranium. Canada, Cameco is based in Canada. Yep. Australia has mining as well. Absolutely. Why not strike a deal with those countries?
Well, we will. This is a global nuclear fuel market, and if there's a beneficiary in all this horrible events in Ukraine, it will be producers in Australia, in Canada, in the United States, producers that are not controlled by Russia,
yes,
and frankly by China as well. There's a lot of uranium production centers in Africa, but we have to remember China is the fastest growing nuclear market in the world, and so we can't rely on some of these mines because I think the Chinese have their own objectives of fueling their own reactors. So suddenly, and I, being a American and now Canadian with our latest acquisition, uranium company, we think that these jurisdictions will get a premium not only from utilities but investors.
Okay, so let's talk about how the Biden administration is actually going to meet their demand. The irony here in all this in this whole story is that there's currently no production here in the United States and actually in North America at large. So yes, the Biden administration, the government wants domestic sources of uranium, but they can't get it now.
Yeah. it's not that we don't have the resources and we don't have the
Exactly.
technologies. We have industries that in the last bull market for uranium were ramping up largely with in situ recovery technology, which is a lower capital cost, lower operating cost, environmentally friendly way to mine uranium from sandstone deposits, which are typical in the United States. We've throttled back. We have a number of operators, including UEC, with operations in Texas that we operated only to shut down because of the low uranium price, just like the Canadians and Australians and others did. But we have 1 billion pounds of known and likely resources in probably 7 or 8 western United States, which can be developed, and we've testified before Congress and submitted information to the Department of Energy that it's not unreasonable that U.S. uranium could meet half of U.S. uranium requirements, 20 million, 25 million pounds a year. But under the right circumstances, we could be totally dependent on that. But I think we see ourselves as ramping up to be part of a global industry. We're likely to make sales into European utilities and other regions as we are in the U.S. So a lot of potential. We're just not tapping what we have in the U.S. like we should.
Let's talk about the price and what's needed for production. Actually, I'm looking at the price of uranium over the last 20 years or so. More recently, it spiked up, and we'll talk about that.
Yeah.
But the last time we saw close to $75 was in 2011.
Yeah.
And then since then, it's kind of hovered around a range, and it's been flat. Are you saying there has been production in the U.S. for the last 10 years?
We, with the uranium price going from $70 a pound down to about $17 a pound from 2010 to 2017, we throttled back our production like other countries did. But the U.S. production is essentially down to zero today.
When did it go down to zero?
Like the EIA numbers for last year probably had 20,000 pounds produced in the U.S. So we're effectively an idling industry, even though we have numerous licensed operational facilities in several states which can ramp back up with the right price signals. And we're beginning to see those conditions.
How many years has the North American industry been operating at near zero production?
I would say the last 3, 4, 5 years.
Okay.
I mean, we've been ramping down, like most producers, as contracts have fallen out of portfolios.
That's right.
Producers have dialed back. But we are seeing, whether it's stimulus from the U.S. government with the Strategic Uranium Reserve or just global uranium prices, I'm probably more optimistic about that because that's a lasting, fundamental reason for producers to get back into production.
Well, I'm looking at the spot price, which is just the market price, but can't the producers and the nuclear power plants, the utilities, strike some sort of deal and just operate at a forward contract amongst themselves? That's independent.
And they
of the spot
are.
price?
Utilities are coming back to the market and contracting. Again, I would say more strategically, they really benefited from low uranium prices over a long period of time to lower their fuel costs. And that's great because they needed that to be competitive in challenging electricity markets. But now it's shifting to more strategic procurement. And so they're going to want to partner with the producers, whether they're in the US, Canada, Australia, or elsewhere, that can meet their needs going forward. And there are contracts being signed, again, that are going to be supportive of that. So, like I said, I'm confident that you'll see the U.S. uranium industry go from kind of sleep mode back into being a meaningful supplier to U.S. and global utilities.
Right. So currently the spot price in the market is $51 a pound.
Yeah.
Scott, what is the price that's needed for UEC and others to resume operations?
Yeah, well, UEC is fortunate. We have ISR operations that are very low capital costs, and in many cases we have hub and spoke operations in 2 states, Texas and Wyoming, that have fully operational processing centers and licensed permitted well fields. So we have a lot of pre-inflationary infrastructure in place. So our threshold is going to be lower than many others, or competitive with other miners around the world. But we have to remember that threshold, people might have said that threshold could have been $50 for the more competitive mines, in recent years with the inflationary and the cap.
$50, you said?
Per pound would be an incentive price for the better mines around the world previously. Now in an inflationary period where the price of PVC pipe, steel, fuel, labor, everything has gone up, $50 could be, $70 in this market. And the point is that, the better operators with lower operating costs will be probably the early movers. I think that'll be a lot of ISR mines, whether they're in the United States or elsewhere, that have lower capital costs and lower production costs. But other big conventional mines that need billions of dollars of investment and still have permitting timeline to go, that threshold could be north of 75. But we will see some of the more competitive production come on here as the uranium price, has been hovering around $50 recently. It touched 63 earlier this year. So I'm confident we're getting into that space. The supply and demand fundamentals are pointing to that. We're producing 70 million pounds less than we're consuming.
Right.
Sprott has come in and as a physical uranium trust and really vacuumed up a lot of excess supply. So we're at a point now where we need new mine supply, and that will be dependent on license permit mines, cost of production, and we're beginning to get into this next sort of production-driven cycle rather than the past inventory-driven market we've been in.
Well, I've heard various targets from various people. The analyst I just spoke to said $100 is needed for production to resume. I spoke to your colleague Amir Adnani, executive chairman of UEC, who gave me $75 as the ballpark. So, depending on what you see the market, depending on what you see the price, either way, it's higher than what we have now.
Yeah.
Until the Biden administration gets that higher price, until we have production resume, how is the government going to get their demand of strategic reserves? Are they going to subsidize part of the production?
Well, we wouldn't call it subsidized. I mean, I would envision that the strategic uranium reserve will be competitively bid amongst miners in the United States that have the ability to sell into the U.S. government. And we think that program is imminent. We're getting the
competitively bid outside of the spot market.
Yeah, so if you are a U.S. producer with newly mined production, you will competitively bid into the DOE for that program. I don't know that for a fact. We'll have to see what the program, how it's structured, but I would think that would be the most constructive way to do it. And so, is that higher than the current market? We just have to see.
How much of this news that we just talked about up till now has fueled the rally in the price that we've seen over the last 2 months?
Well, it has, and I don't think the Russian impacts have really been fully felt yet because I think utilities in Europe are moving away more quickly. I just returned from 2 trips in Central Europe and the Czech Republic and Poland, where they, with the events in their own backyard, are moving away from Russian supplies more decisively and are early movers. I think some of the U.S. utilities may be moving to cover themselves. Some may be hoping that the sanctions could be more gradually introduced and there won't be as impacted. But really the movement in the price to date has been the fundamentals. It's production lagging consumption by a big gap, demand now increasing at 3.5% per year with new nuclear power plants coming on board. 62 have come online in the last 9 years, 55 under construction. So we're really in a growth industry again, and that's going to require a lot of new mines. And we fully assume that the world-class mines of Cameco and Saskatchewan are going to produce at full capacity. We assume that the world leader Kazatomprom will produce at full capacity and sell into the West, provided they're not inhibited by Russian sanctions in any way, shape, or form. But I still believe we need probably 8 to 10 additional new mines coming on around the world in the next 5 years, the second half of this decade. And that's where UEC is well positioned in Wyoming and Texas, and we believe other mines are needed beyond this. So it's a very exciting time for uranium miners and developers.
Can we talk about these fundamental drivers a little bit more? The price really started moving dramatically last summer after August, and I'm talking about from $33 all the way up to $65. It came down now to about $50, $51. What happened there? Well, I know Sprott was had a big impact.
I hate to say that Sprott was the catalyst because the supply and demand fundamentals were the catalyst. Sprott was the tipping point.
Okay.
I think they brought us to a place in the market that we were going to be in 2 years anyway. We were rebalancing on our own. The introduction of that kind of capital coming in to buy spot uranium really just compressed that 2 years into the present. So, yes, that helped get the price up to 63, but the demand has to come from beyond Sprott, and U.S. utilities, global utilities, are now resuming long-term contracting cycles again, but it's still well below what would be a normal level that we've seen in past markets. So I would expect pressure on uranium price going forward as utilities come back to the market. We don't have as many supply sources. We need mines to come online, but they haven't been incentivized. They will. Prices will incentivize that production, but it's not an overnight situation. UEC's fortunate. We have mines in Wyoming that maybe can come on in 6 months' time. We're already taking steps to bring our newest investment from Uranium One at Christensen Ranch online. But other mines, if they're not permitted and licensed, could be years away. And so it's going to get a very interesting time for us to kind of see this crunch and how it plays out.
I think the average layman is probably wondering what this means for him or her. Suppose you're right, suppose the price moves up higher, that incentivizes production to resume. Well, keep in mind that also means higher prices for the utilities to buy their fuel from or with. What does that mean for the electricity price?
Fortunately, unlike natural gas, where the fuel, the gas, is 75% of the generating cost, with nuclear fuel, it's so energy dense and a lot of energy in a small package that the uranium is probably 10% of the fuel cost or the cost of generation. So I'm not saying that utilities don't care about the price they pay. They do dearly, and they're very spend a lot of time, getting the best fiduciary responsibility for their ratepayers. But uranium prices can afford to go up dramatically from where they are, and it's not going to handicap nuclear power. I'll also mention that the selling price of electricity in the U.S., because of high gas prices, utilities are making a lot more off their generation of nuclear power plants than they would have in a period where they were really genuinely struggling, and we had plants on the verge of early shutdown. But again, I think the advantage of nuclear fuel, uranium fuel, is the price could go from 50 to 100.
Right.
It would raise the fuel cost to some degree, but it doesn't price nuclear energy out of the market.
This is just my own personal speculation. Please correct me if I'm wrong. But I'm just looking at this market and I'm thinking to myself, okay, well, there's no current production in the U.S. They have to outsource to Russia. Okay, fine, maybe it's just cheaper that way for the utilities. But if the utilities want to make a partnership with domestic suppliers, they could just, again, going back to my previous point, they could just strike a deal under the table, but they're not doing that, which makes me wonder.
They are doing that now.
They are?
This
So
contracting
the utilities
cycle,
can afford to buy at higher prices.
They want a robust, diverse portfolio of fuel suppliers, and if they can have competitive suppliers in the United States, they're more than willing to. So they are stepping up and they are contracting. And so that cycle is beginning again. So I'm not worried that the market's not going to be in a place that supports U.S. or Canadian or other production in the coming months and years. We're at the beginning of a new cycle.
Okay, that's interesting. Do you see any technological developments in the nuclear power space and the mining space as well? That excite you?
In the nuclear space is the small modular reactor. I mean, these are not the 1,600 megawatt massive reactors that are still being built and are needed in countries that need massive amounts of carbon-free energy. But we're talking about 100, 200, 300 megawatt small modular reactors, which may be more similar to what we see as in naval reactors in aircraft carriers and submarines. Built on land, they're scalable, built in factory, shipped on site, lower capital cost. In the UK, Boris Johnson's proposing 16 of these SMR reactors being built by Rolls-Royce throughout the UK. In Wyoming, we're seeing an SMR or advanced reactor go into Wyoming to replace a retiring coal-fired power station. These are exciting developments because this is demand from a sector of our market where this is new demand. I mean, we still have the big reactors and the 62 reactors that have come online. We could have hundreds of small modular reactors coming online around the world in the coming years, and that's going to present a really nice new market for uranium.
All right. Nuclear fusion reactors. When are we going to see those?
Yeah, I mean, there's
Is that science fiction or is that science reality?
It's real. The problem is if you see the big fusion reactors that are being built in Switzerland and other research, it typically takes more energy to produce energy from these big, massive programs. Right. So they're net negative energy. But hey, we're for the world needs more energy of every form, and so if there's other additional ways to produce electricity cleanly and reliably, we think nuclear, has an important part in the mix. But yeah, we welcome new technologies. I don't think we're imminent on the fusion front.
Closing off for investors in the markets. Now, I've noticed that the uranium price and the stock price of these miners in the space have decoupled over the last couple of months as uranium has gone up while it seems to me like Cameco, yourself, UEC, it's moved down with the markets. What's with the decoupling here?
Well, I think the UEC has been one of the best performing uranium equities in 2022. I think all uranium equities have pulled back with the broader market sell-offs in the Dow and the S&P. We're eager to have those broader markets stabilize because we announced yesterday here at PDAC the acquisition of UEX in Canada, which will double our future production pipeline of uranium in one of the best jurisdictions in the world. We're eager to have global markets settle down so we can properly price and re-rate not only that investment, but our Uranium One investment in Wyoming, which doubled our production with that accretive investment. So it's exciting times. Global turbulent markets, but nuclear power is not recession-proof, but it's pretty darn close.
You used the word mispricing. So final question, I'll let you go, Scott. What's more likely, a reversion of the stock price upwards towards where it should be fairly valued, or perhaps the uranium price coming down to meet where stocks have been? Because some people might say that stocks are a leading indicator of the base commodity.
Yeah. No, uranium price is clearly going up from here. The fundamentals just, there's no way that they can't, especially with Russia, Ukraine, and utilities moving away from Russian supplies, creating added demand on an already tight market. The equities, with this pullback, none of this weakness over the last 2-3 days had anything to do with uranium, nuclear power, or the individual companies. So if you're an uranium investor, this is a wonderful opportunity to pick up your favorite uranium names and add to your portfolio, because we have a very bright future for nuclear power, and we need a lot of uranium to produce all that clean, reliable green energy.
All right. Well, before I let you go, company developments that investors need to be paying attention to right now coming out of UEC, what are they? Yeah, well, clearly the Uranium One investment, which gave us the 2 production platforms now, not only just Texas, but also Wyoming. Our nearest productive capacity is in Wyoming with the Uranium One assets that we acquired in December of last year. And now with UEX, this proposed combination of these 2 companies goes for a shareholder vote of UEX in August. We're very excited about this. We love being, if we could, in our pro forma company, if we could have our footprint be Wyoming, Texas, and Saskatchewan, we have the 3 best uranium jurisdictions in North America, if not the world. And we're ideally positioned. We believe in the uranium story, the nuclear energy story, so look for us to continue to grow. We've not only grown organically with our assets that we've had, drilling, permitting, bringing them into a productive state, but we're also out acquiring through M&A as well. So look for UEC to continue to grow. We want to be a leader. We are now probably the leading North American focused uranium mining company, and that's the place where we want to be. All right, Scott. Well, it was a pleasure talking to you, and best of luck with your endeavors. Great. Thank you. And thank you for watching Kitco News. I'm David Lin. Stay tuned for more.
Kitco News special coverage of the PDAC convention is brought to you by Gold Mining and Uranium Energy Corp.